stainless overview on the global market. But just firstly, I'll just have a quick intro on what it is we do. I'll not bore you too much, don't worry. So we research the steel market and produce monthly price reports and forecasts. And we do this by speaking to people in the market who are buying and selling steel, just to ascertain what price has been paid to the mills each month. We then publish those prices in the monthly PDF reports and also on the MEPS portal. We then produce forecasts going 12 months out into the future, which we update every month to take into account any changes that have occurred in the market. Our customers use our prices and forecasts to help with their monthly negotiations, to plan their budgets and aid in their strategic purchasing decisions. If you want any further information, you can either speak to myself or my colleagues. I don't want to bore you too much with what it is MEPS actually does. Coincidentally, we've just moved our website as of today from meps.co.uk across to mepsinternational.com. So if you do have any issues getting on the website at all, maybe just leave it till tomorrow. There's always teething problems with these things. I'll start with going through the general UK and European market scene. So what we've seen this year, we've had steep price rises from the end of 2020 throughout the whole of 2021. And despite those price rises, stainless prices still remain below the record highs that we saw in 2007 and 2008. Obviously, the 2007 peak was mainly because of the rise in nickel prices to above $50,000 per tonne. The current level is obviously considerably below that at around the $20,000 per tonne level. What we can also see is over the majority of the time, the UK price generally tends to sit a little bit above those of the European average price. However, so far this year, we've seen the UK price rises have just lagged a little bit, the increases noted in mainland Europe. Part of that is because obviously we've got less import protection post-Brexit for the stainless prices in the UK market. However, we have seen that price sort of premium has started to return a little bit in the UK market as import offers from non-European suppliers have started to increase more recently. That's partly to do with low availability, high freight costs, long delivery lead times, and also strong demand in the Asian market. Also, the European market has more import protection with the safeguard measures and anti-dumping duties. The drawn bar prices, the UK premium has managed to maintain it for the majority of this year, although we have seen that premium narrow slightly this year, the last couple of months, because of the summer lull really more in demand. Indian import offers are also still remain considerably below the domestic UK and European prices, although they have also been moving up recently with the high freight costs. What we've also seen on the import side, in Europe, we saw a general upward trend pre-pandemic, and that import tonnages have started to recover this year, although from the data that we've received so far, which I think goes up to April, it looks likely that 2021 import tonnages into the mainland Europe will remain below the pre-COVID levels. One of the main decreases we've seen in imports have come from China since 2019. And we've also seen big decreases in hot rolled coil from China and Indonesia since the introduction of anti-dumping duties last year. We're also expecting to see some reductions in cold rolled following similar trade actions against Indonesia, and also we've seen production restraints in China and obviously the introduction of the removal of the export rebate in May of this year. So in terms of the top import sources, India is the main importing country for the majority of the products, but in particular for wire rod, bars and sections. On the coil front, so far this year I think we've got 6 months of, you've got 4 months of data for EU, and the Turkish coil and plate imports are starting to rise considerably. We've seen that they'll be above the 2019 levels for coil and plate from Turkey. We've seen that as well with the European Commission quotas, where they've been exhausted pretty much straight away for the last 2 quarters. The current trade protection measures in Europe, we obviously have got anti-dumping and anti-subsidy and safeguard measures. We've also heard a little bit more about the carbon adjustment mechanism with proposals that the provisional measures will be introduced from 2023 and the full measures from 2026. We have yet to know what impact that will have on the European market. So we generally tend to produce an update on the quota scenario in Europe every month with our monthly publications. As you can see, the extension of the European Commission safeguard measures from June with a 3% uplift in tonnages has still resulted in some categories being exhausted quite quickly. If we move on to UK imports, so we saw the same dip in 2020 with the pandemic. However, based on the first 6 months of this year on UK trade tonnages, 2021 is on course to reach pre-pandemic levels. Now, 80% of the supply, or more than 80% of the supply, comes from mainland Europe. We can see that when we look at the top 5 sources. The majority of these are European countries. In terms of the non-European supply, we generally tend to see South Africa, China, Taiwan and Turkey coming up there. And in terms of coil and plate imports into the UK market, those 5 countries are on course to beat 2019 import tonnages. India is the top import destinations for bars, and we've seen significant increases in 2021 for bars from India. Now, that's probably likely to be a 7-year high from the Indian bar imports, although that's likely to be at the expense of imports from other countries. Obviously, following the UK's departure from the European Union, we have currently in place very little protection for stainless imports for the products that MEPS covers at least. We've got a few small ones on the stainless bar, but relatively small duties. I know a lot of suppliers were concerned that post-Brexit we'd see a massive rise in import volumes in 2021. But obviously, with the low availability and the high shipping costs, we haven't yet, I think, seen the full effect of the Brexit and the lack of import protection. This could very well come once that normalises. I know the Trade Remedies Authority are currently reviewing the safeguard measures. I'm not sure when actually that will be completed and whether they'll reintroduce any safeguard measures into the UK market. And then if we have a look at the global scene and where the European market sits within the global scenario. So we see that despite the rapid rises that we've seen in all regions, Europe has actually surpassed those now in the US and Asia. The Chinese prices tend to pull down our Asian average. They generally tend to be one of the cheapest across the Asian region, although Indonesia is a new source in this scenario and it isn't included in our Asian average price. What we've also seen in Europe is we've had a return from selling on effective prices to base plus in Europe. That has also fueled the upward movement in the last few months. As many mills have tried to return to profitability, we saw extremely low nominal levels of basis prices at the end of last year, and now they've returned to a much healthier level. We expect that to continue in the near term. The US mills have been a little bit more consistent in their pricing structure over the last few years, so they've maintained the base plus alloy surcharge pricing mechanism. We've also seen base price increases this year in America, but not to the extent that we've seen in the nominal basis prices in Europe. Asian prices tend to be an all-in and include the raw material costs and tend to fluctuate a little bit more with nickel. 316 prices have followed a similar trend to 304, although the escalation in molybdenum costs this year have fueled the upward momentum in stainless steel prices for this grade of steel. We've seen slightly slower pace of growth on the bar side. So we've had basis price increases in the US, although not to the same extent as we've had on the flat products. The European market generally has stuck to the effective pricing system and haven't really returned to the base plus alloy surcharge pricing mechanism as yet. And that's the same for the 316 as well. So, what's next for stainless steel prices? So what we've seen in Europe is we've seen a narrowing in the gap between transaction prices and alloy surcharges. This was obviously evident when we had the nominal basis prices at the end of 2020 at extremely low levels, and then we've seen that gap widen as basis prices have increased this year. We expect basis prices to continue climbing in the next few months. The market is still reasonably tight, although we do envisage an increase in imports over the next few months. So we produced these forecasts at the end of August. At the time, nickel prices were reasonably stable, although they have moved up recently to the $20,000 per tonne level. But early indications are that for instance, we were forecasting €3,700 per tonne effective price for September, and at the moment that level still looks reasonable. We were forecasting October prices to be stable, although it looks likely now that alloy surcharges are probably going to come in a little bit above where we were forecasting for October. So we do expect further increases in transaction prices for October now. However, we believe that this will be the peak. Part of the reason for that is raw material costs. So we believe that nickel prices are unlikely to move much higher than where they are. We've already started to see some reductions in spot chrome prices, and iron scrap prices are also starting to come down. This will impact on alloy surcharges from November onwards. We expect an influx of imports as well in the fourth quarter, which will help alleviate some of the supply tightness that we're seeing in the European market. And this is also similar in the US market as well. The Asian prices tend to, like I say, follow the raw material costs more closely. So we will see reductions in that market as well. And they generally tend to be a little bit less volatile. It also has to be said that the stainless market is cyclical. I know it was alluded to earlier on that when prices go up, they generally tend to come back down again. We do expect prices to fall, but we don't expect a price collapse. We expect a more modest decrease starting from the end of this year and into 2021, although demand generally tends to pick up in the first quarter, so we expect a slight softening in that period. We've also got high costs of materials likely to curtail investment in the steel sector. We've also seen carbon steel prices start to weaken, and what we saw during the ramp up on the carbon steel price was that some of the customers were moving their material choices across to stainless steel, especially for galvanised, where the price of galvanised was almost reaching some of the price levels that we were seeing on stainless. And as the price on carbon starts to reduce, then that switch will go back. So the demand pull on stainless will ease a little bit over the next 12 months. Some of the price indications we're getting on the carbon side in the last week has seen some quite sizable decreases. So this could happen quicker than what we'd originally envisaged at the end of last month. The automotive production seems to have affected, or the reduction in automotive production has affected the carbon market, I think a little bit quicker than we expected it to happen. We've also got credit limits are going to continue to be an issue over the next few months, especially as stainless prices continue to rise further. This is obviously going to put a squeeze on purchasing activity. We've also got government furlough schemes and support coming to an end shortly. This could result in some job losses and affect consumer spending. However, low stock levels in the market and government investments should help to ease some of the reductions in consumption from some of the other sectors and help to reduce or soften the downward trend in demand over the next 12 months. We expect apparent demand in 2022 to wane, partly as inventory levels return closer to more normal levels and sort of general buying resumes rather than sort of panic buying and people overbuying for stock purposes. So we do see a general downward trend occurring in 2022. We do think prices will stay relatively high over the next few years though. We expect raw material costs in general to be the main driver for stainless price forecasts, certainly in the short term, sort of prior to Christmas. We don't really expect any decreases in basis prices in the US in the next 3 to 6 months, and in Europe it's unlikely to happen before the first quarter. The unknown here as well is China. I mean, we've had a lot of production cuts in China, so what we may see is the gap here between Asia and the US and European prices may very well narrow as the production restrictions in China help to just tighten the market across Asia. This is a similar trend for 316. We do expect molybdenum costs will start to ease as well over the next 6 months. Production restrictions will also, in China, will help to ease demand side on the molybdenum production. Bar prices, as we saw a slower ramp up in the prices, we expect to see a slightly more gradual reduction in bar prices over the next 12 months, with a little bit more volatility coming from the raw materials side. And again, that's the same for the 316 as well. I don't know if you've spotted all the QR codes on all of our posters and cards outside, and it's the same here as well. If you scan any of those QR codes, you can download our current edition of the MEPS Stainless Steel Review. This code will remain live. You can either take one of the cards that we've put on the tables outside, or you can visit our website, or come and speak to either myself or one of my colleagues who are here with me today, and we can answer any of your questions. I don't know if anybody's got any questions now. Yes?
What do you think the year-on-year increase in European stainless consumption has been this year? Cold roll or something like that? And how much of that has been real consumption and how much has been sort of stocking?
Well, what we've seen is that the stock levels have actually fallen over the last sort of 6 to 9 months. So although we've seen a lot of purchasing activity, a lot of that hasn't necessarily gone into stock. So distributor stocks have fallen. So I'd say that a lot of the purchasing or the sales from the mills, the real demand has probably been slightly higher than that. So I do think we'll probably see a much smaller increase next year because that'll be the opposite.
Is it double-digit growth?
I don't know about double-digit. It's certainly because it started at the end of last year, so some of the growth will have gone into the 2020 period, but we will see extremely good growth in Europe this year, definitely, yeah.